JFD, just fair and direct.
Okay, hello and good morning everyone. Welcome to JFD Traders Espresso with me, Darius Anucauskas. Today's the 14th of September 2020. So yep, welcome everyone. Welcome to this Monday's morning session where we're going to have a quick look at the markets, a few of the charts, some of the charts, most of these charts will be the ones that I looked on Thursday just to see how everything's getting along. I was off on Friday, so there was no videos, no Traders Espresso nor Tea Time videos on Friday. So yep, guys, like I said, we're back to normal this week. But yeah, as always, before we jump into the charts, let's quickly have a read through our risk disclaimer. So the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, a few seconds for you to read the rest, and we can continue. Okay, so now then, also just before we jump into the charts, let's quickly have a look at this chart right here. So just wanted to start off with this right now. I mean the coronavirus, yep, we can see that the numbers have risen, and on, if I'm not mistaken here, on, it was Friday, yep, that was on Friday, we saw another surge, and basically we've hit an all-time high in terms of daily cases. So yep, unfortunately that's the situation, but hopefully this can stabilize, because as you can see, it kind of quickly dropped to the downside heavily. However, some other sources don't have this huge drop, but of course we'll see how all that's going to look. But nevertheless, the problem here is that the numbers do not decline; they keep on ranging here. So hopefully this can start moving lower. However, of course, there are concerns due to the fact that we're now coming out of summer and going to a more cooler period, which may kind of push this number up again. But again, like I said, we'll continue monitoring this. Hopefully all this can stabilize finally. And yeah, so also a quick mentioning of our JD YouTube channel, to which you can always subscribe to in order not to miss any of our upcoming videos, and of course our JD Bank website, and specifically our JD research page, which we also update on a daily basis. So feel free to visit us here on jfdbank.com and click on the research tab right there on the top. So now then, jumping into the charts. Now the first one I want to touch on here is actually Nikkei, which I've just switched off, unfortunately, guys. Let me just get it back here into my list. So Nikkei is well, it's showing good results today. It's pushing higher, but in a way, I mean, of course, everything what I was talking about last week is working out nicely here. So we had a nice push above this 23,339 zone, so that's great news. So we can actually, I mean, we'll take that as a positive. Also, if you're a little bit more on the cautious side, what you could do here is you could grab this high right here, the high of the current highest point of September, and as you can see, and that's roughly around the 23,580 zone, and you can see now that the index is testing that area. Of course, the index is already closed, but it came very close to this, so of course all eyes are going to be on tomorrow's opening, and we'll see if we'll have a nice opening gap here to the upside. We'll see how the cash index will perform today, and will it be driven up or down by the European and US equities. But again, like I said, for now everything's looking quite positive here on Nikkei. we had, like I said, we had our push above this 23,339 zone, so that was great. You can see that yes, it continued to push further north, and now this obstacle that it would need to overcome to get a little bit more excited about higher areas, and that's the current highest point of September near that 23,580 zone, which is right here. So keep your eyes on that one. Now jumping into Shanghai Composite, and here you can see that the index is also trading slightly in the positive territory. We did get a drop, you can see here last week we did get a drop below this 3,238 zone. I talked about this one, but on Friday the index sharply reversed to the upside, and today we're actually here. We're trading between these two lines here that I talked about previously, this 3,307 zone on the upside and this 3,238 on the downside. Now, don't get me wrong, this technical picture is a bit of a tricky one. It looks a bit difficult. However, now what we could do here and how we could look at this. Now, previously I talked about this 3,307 zone, but probably it's time to adjust this a little bit. We're still keeping an eye on this this potential range idea here, where the index, as you can see, is kind of stuck in right now. But from the short-term perspective, basically what we can do here is we can keep an eye on this little area right here, the 3,200 and well, let's round it up towards the 90. So 3,290 zone. If we get a break above this, then yes, this could travel a little bit higher here, but of course keep your eyes then on this 21-day EMA shown as the yellow line. But if you want to be a little bit more on the cautious side, you could wait for a push back above the 3,336 zone, which, as you can see previously, acted as a very nice area of resistance here back in March. So the highest point of March 2018, I need to specify that. So so a nice good push back above that area could in a way open the door towards higher levels again. But for now it's stuck here, although it's showing good result today, well, relatively good result. Still probably a push back above this 3,290 zone could maybe raise this index a little bit higher. Now if it suddenly starts dropping back below this 3,238 territory, then well, we're still aiming for this lower side of the range here, which is around the 3,181 territory, and then yes, of course we will take it from there if we get a test of that area. Now jumping into the German DAX, and here you can see that last week the index managed to close its week slightly in the positive territory. Now something that I wanted to show you as well, guys, I mean, this could be a possible idea here where the index could be forming here this this bearish this uprising, this rising wedge formation, which tends to be a bit of a bearish indication. According to all the TA rules, these patterns tend to break to the downside. I mean, a rising wedge breaks normally to the downside, and the falling wedge breaks tends to break normally to the upside. But again, of course, we do have our exceptions sometimes. But at this point in time, I mean, what we're going to do here is we're going to keep it short and simple. So first of all, we're going to keep an eye on this 13,314 zone, because if it somehow continues to provide resistance, then we may see a bit of a decline here. But of course, all eyes then on this lower side of the wedge. If it provides support once again, then we could see this one reversing back to the upside here, maybe going towards the upper side of the wedge. Now, of course, in a way, we cannot really, we will still keep an eye on this idea of seeing maybe a break to the downside. However, until we get that break, we're just gonna stick probably more to the upside here, and we'll continue monitoring this this activity within this pattern, within this whole pattern. And if of course we get break through the lower side of this pattern, then yes, lower levels could be met. But until then, there is still a chance for this index to move higher. DXY. So here the dollar index, although it declined here on Thursday, as you can see, the bulls quickly pushed the index back above the 21-day EMA. I talked a lot about this index last week, and I was saying that keep your eyes on this 21-day EMA, which, as you can see, continues to provide support. Now, previously it acted as a good area of resistance, now it's acting as a good area of support. On Friday we saw also a bit of a decline here, however it still remained above this 21-day EMA. Today we're seeing a bit of a decline again, however we're also keeping an eye on this 21-day EMA, because if it holds again, then yep, we could see a nice reversal here and a push higher. But this push higher could still be seen as a temporary correction before another possible leg of selling. Now, because we're still trading below this downside line taken from the high of the 23rd of March. Jumping into gold, and gold is in a very tricky spot, I would say, because as you can see, it's stuck here between these two lines. Now it's stuck between the medium-term upside support line taken from below the 20th of March and a short-term tentative downside resistance line taken from the high of the 18th of August. So what we're going to do here is we're going to wait. We're not going to do anything. We're just going to wait. Basically, we're going to wait for a breakthrough one of these lines, and to be honest, in addition to that, maybe I will wait for at least a push above the 1966 territory, which is the high of last week. And if we get a push above that area, then of course the next target is the 1992 zone, marked by the current highest point of September, and then yes, of course, a further move higher could be possible here. Now, in terms of the downside, preferably a drop below the 1901 zone here could do the trick for more sellers. Now, jumping into Ripple, and Ripple here, you can see that it's still stuck. Now, last week I talked about this, where I was saying that in a way, if we get a drop below the 0.2357 territory, then yes, we will consider a bit of a further correction to the downside, up until a possible test of this upside support line taken from the low of the 13th of March. Now, as you can see, for now the crypto is stuck. It's stuck here between these two levels, the 0.2357 on the downside and the 0.2550 on the upside. Now, the 0.2550 on the up here is acting as a very nice area of resistance. Previously it acted as a good support, and also at the same time it coincides with the 21-day EMA. So in other words, a breakthrough one of these levels is required in order to consider the next short-term directional move. USDJPY. So I talked about this one last week, and I was telling you guys to keep a close eye on this barrier right here, the 77.65 zone. And as you can see, this area continues to provide resistance. So in order to aim for some higher levels, we need a push above that. Now, of course, at the moment that push is not happening, so that's why we'll remain a little bit on the cautious side. We're not going to really look at the downside, because as you can see, the rate is back above this 21-day EMA, unless this gets broken and the rate starts falling below the low of last week here near the 76.12 zone, and then yes, lower levels could be met. USDCHF, here USDCHF is moving nicely to the downside. However, this level right here, the 0.9073 zone, is still providing some support. Now again, the moment this idea kind of partially worked out, the one that I was talking about last week, where I was saying that if this short-term downside resistance line taken from the high of the 28th of May does provide resistance, then yeah, we could see a nice move lower, maybe even going back down towards the 0.9010. So like I said, that's what I'm saying. So it worked out partially, because we did drop below this 21-day EMA, but we're currently getting a hold up near this 0.9073 zone. So if we get a nice good drop below this area as well, then yes, we'll continue with a further decline here. In case this pair decides to pop and break above this downside line and then pop above this 0.92 zone, then it may open the door towards higher levels. But again, this is the area after a break of which we could consider higher levels. Until then, there is still a chance for this pair to move lower. We'll of course we'll be very careful here, and we'll keep an eye on this 0.9073 territory, and if we get a drop below that, then yes, lower levels could be met. GBPUSD drifted lower last week, and as you can see, it created a new lower low for this year. Now the pair, as you can see, the pair dropped below this the lowest point of July near the 1.7696 territory, and continues to move further south. I was talking about this level here, the next potential target near the 1.7562 zone, and that's basically the lowest point of July of 2019. As you can see, we did get an overshoot here, but the bulls kind of quickly pushed the pair back above it, and today, for example, you can see that the bulls are still trying to fight it, and they're still trying to kind of bring the pair back to life, let's put it this way. However, until we see a push back above this 1.7696 zone, or in a way you could round it up towards the 1.77 territory, if we get a push back above the 1.77 zone here, then yes, we could aim for a bit of a larger correction here to the upside. However, if it stays below this 1.77 zone, then, well, I mean, maybe the pair is not done with the downside yet. Jumping into Euro Ruble, something that I wanted to show you as well, and look at this move to the downside here. So, and especially look at this this level right here, the 90.10. We can round it up probably, maybe. So basically the pair found resistance near the highest point of March, which was of this year, of course, and that was near the 90.09 level, or in a way we could actually take this level, this new high of this year, and because, like I said, this level here, this area here did provide good resistance. The pair did reach this 90.25 zone and then started declining lower. Now all eyes are on this little short-term upside support line taken from the low of the 12th of August, and if that gets broken and we see the rate falling below the 21-day EMA, now this is where it could become very interesting here for these sellers, and we could see this pair drifting a little bit further down for a larger correction, because don't forget, overall we're still trading above this upside support line taken from the low of the 24th of February. And finally, EURUSD. So this one continues to balance above the 21-day EMA and above this 1.1815 level that I kept talking about last week, and at the same time it's also still trading above this upside support line taken from the low of the 14th of May, and in a way for now everything's still kind of leaning more towards the upside, as long as this upside line stays intact and the rate remains above this 21-day EMA, then there's still a good chance this pair could travel higher. But once this upside line gets broken, and the now previously I talked about the 1725 zone, but probably it's time to adjust it a little bit. So let me just remove it. Of course, this 1.1725 level is going to be an important one to watch. However, let's recycle one of these lines here and probably keep an eye on the low of last week near the 1.1753 zone, and a nice good drop below that may open the door towards lower areas, guys. And yep, then we could start looking at some of these areas, like for example, and let me just probably remove some of these lines just to kind of clear up the chart a little bit. So now if we're going to drop below this 1.1753 territory, the next target to keep an eye on is somewhere near this 1.17 zone, or maybe just slightly below that, the 1.1696 zone, marked by the low of the 3rd of August, or in other words, the current lowest point of August. Now if that gets broken, of course this could start rolling over here and going further south towards the highest point of March here near the 1.1496 zone, and then of course we'll take it from there. But of course all this is in the in the scenario if this short-term upside support line gets broken and then the rate starts falling below the low of last week near the 1.1753 zone, and like I said, then we will consider a bit of downside here. But for now, at this point in time, until we get that break, there is still a chance for the bulls to drive this one higher, back towards the 1.1965 zone, or even that psychological 120 zone. But of course, let's see how all this is going to work out. We do have a bit of a tricky market right now, so that's why be careful, guys. Don't overtrade. Have your stop losses in place, and well, all should be fine. So be very careful here, guys, like I said today and in general this week, and I'll pick up on some of these instruments today later on in my trader's tea time at 13:15 GMT. I'll add up some new ones as well just to see how the other instruments are doing. But I hope, guys, you have a fantastic trading day. Stay safe, and I'll see you later. Thank you very much, and bye-bye.